Welcome to Larking Gowen Insights, accountancy and business advice for all, a series that gives you bite-sized tips and guidance on tax, funding, legislation, reforms and much more. With case studies, business advisory and sector specials and even interviews, our team of experts are committed to helping you navigate the world of accounting and finance with a variety of presenters from across our specialisms. So, let's get on with today's show.
Hi, and welcome to FUNDcast, our charity podcast mini-series where we take a deep dive into issues that matter to charities. I'm Emma Hayward, and this is my colleague Giles Kirkham.
Hello, everyone.
We're charity advisors at Larking Gowen, and together we're going to explore hot topics that charity leaders are facing at the moment. We're looking to have some fun along the way, so whether you're already involved in running a charity or simply looking to be inspired, FUNDcast is the podcast for you. So, Giles, what are we talking about today?
Well, Emma, we get a lot of questions from people looking to set up a not-for-profit enterprise, and they want to know they're setting up correctly and what's the best structure for them. So therefore, that's what we're going to have a look at today. Best structure for a new not-for-profit enterprise.
Okay, so we're looking at the best legal structure, as you say, and we'll clarify on that. But what are the choices?
Well, basically, there's to be a charity or not to be a charity. Within charities, there are several ways to do this. You could, the old-fashioned ways, the tried and tested ways, are to be either a company, a charitable company, or a charitable trust, or to be what's called a Charitable Incorporated Organisation, a CIO. Most new charities now form as CIOs. Before you go along the route of deciding what form of charity you want, do you need to be a charity at all? It's possible that another format would be more appropriate, for example, as a social enterprise. The typical format of a social enterprise is a thing called a CIC, a community interest company, and that's the nub of what we're going to cover. CIC or CIO?
So we'll focus on CIC and CIO today. Can you tell me what CIC and CIO stand for? Because I think it's good to start with the basics.
Right. CIC, Emma, is Community Interest Company. CIO is a Charitable Incorporated Organisation. CICs, the Community Interest Company, they're both comparatively recent formats. CICs have been around since 2005. They've been possible formats, although they were it's probably fair to say that they were relatively slow in starting up. CIOs, the Community Incorporated Organisation, they've been a possible format since 2013 in England and Wales. You could go a bit earlier in Scotland. And both are legal structures for non-profit organisations in the UK. So the differences between them: CIO is a charity, CIC is not, it's a social enterprise. CIC, the social enterprise, is a company which will be registered at Companies House. CIO is not a company, so it's a charity and it's not a company. CIOs, being a charity, are regulated by the Charity Commission. CICs are not. They comply with company law and they are regulated by the CIC regulator.
Okay, so it certainly sounds as if they've got different regulatory bodies, some degree of structure, but those are more legal elements. What are the practical differences? I think that's what people want to know. Practically, how do they differ?
Well, just before we started recording, I had a look at our client list and just to see what type of CICs typically, what a CIC might look like in practice. In practice, it's all sorts. A CIC is all sorts of community partnerships, and some of them have names that say X community partnership. So we have small theatre, we have a community bus company, community pubs, a cafe and bike repair shop, a family support group, environmental activity group, and a business incubation centre. So it's all around community partnerships, and some of them are quite small, but some of them get of quite significant size. The main difference is that one of the main differences is that charities may only trade for their charitable purposes, the purposes that sit in their constitution. If they are trading outside their purposes for purely for profit, they may only do that in limited circumstances. On the other hand, the CIC is designed to trade and generate its own income just like any other
Right.
commercial company, albeit for a community purpose. So there is a benefit to being a CIC. You're more likely to form a CIC if you're planning to trade to raise significant amounts of your funding.
Okay. That sounds very interesting. Does it affect anything? We've talked about trading. Does it affect anything else in terms of, say, access to funding?
Well, I think it's fair to say that some grant funders and business donors will only fund charities. This is because charities are more highly regulated. It's a better known brand, and there's so as a donor, you've got a you have a perceived greater assurance that the funds will be properly applied towards the sort of narrow aims. Secondly, so one is about yes, access to funding from certain uh, grant givers. Secondly, donors, both individuals and companies, will get tax relief on donations to charities. Typically, that's by gift aid, but they won't in donations to CICs, which have a tax status identical to an ordinary trading company.
Okay.
Just for completeness, I would say that as well as the gift aid reliefs, you also get for donating to community amateur sports clubs, which are CASCs. So for a sports club to get the tax reliefs, so you've got options of charity and CASC, and CASC is the more normal route to go down because it's a bit less regulated than charities.
Okay. Without muddying the waters with casks, I can see some of the practical differences in terms of grants. We mentioned it in one of our previous podcasts was we talked about tax and you mentioned it again. What are the different reliefs, both formats, CIC and CIO?
A CIC, it's a trading company, it doesn't get any tax reliefs. There's no tax relief compared to a normal trading company. Charities get quite extensive tax reliefs. The government annually publishes statistics. You like a statistic, Emma?
I
I
love a
know you love a
statistic. I do.
statistic.
I do.
They've just got fairly recently. Every year they publish statistics on the total tax reliefs benefit to charities, and the government has in fact recently published its 2023 statistics on charitable tax relief benefits, and in total benefit to charities and to donors to charities was just under £6 billion, £6 billion in a year, which is up 8% from the previous year, which is broadly consistent with inflation. Of that, so what are the big amount? The biggest tax relief will possibly come as a surprise to you is 2.4 billion of that six is business rates relief. So the biggest benefit in tax to charities is those charities that otherwise would be paying full business rates, and being a charity gives them 80% mandatory relief. There's another 20% which they may or may not, depending on their local authority. So 2.4 billion is rates. The next highest benefit is, Emma?
Corporation tax?
No, no,
Really?
they do not. They do not measure corporation tax, and they don't measure VAT. Partly because no one puts in a return for relief on those, so they're difficult to calculate. If you're going to pay corporation tax, you've got to make a profit, and many not-for-profit charities are not making profits that would be subject to much tax anyway.
Right.
So the next biggest is gift aid. 1.6 billion is the benefit at basic rate relief to charities which can bulk up a gift aided donation by 25%. Then there is about half of that, 740, which is the gift aid to higher rate donors,
Yep.
and a similar amount, 790, inheritance tax relief.
Ah,
So,
fascinating.
so those are the biggest reliefs. So the big two are rates and gift aid.
That is fascinating, and surprising actually, very much so. I think there's obviously advantages in terms of tax, as you say, across the rates relief astounds me. It really does. But I've had clients talk to me about wanting to take a small salary from their potential entity, be it as a trustee or a director. Are those options available in CICs and CIOs?
I'm going to take the CIC first.
Yep.
Directors of a CIC, they can be paid members of staff.
Right.
You can pay what's reasonable. If you pay more than what's reasonable, then then you arguably that money is not being paid for community benefit, so you're breaching the rules of being a community interest company. So yes, you can, and there's a lot of freedom around that. Trustees of a charity can, however, only be paid in very limited circumstances. In a charity, those wishing to be a founder, if you want to be paid for your work, you've got to hand over control of the organization to a board made up of volunteers, which I mean, that's the voluntary principle. That's why it's the voluntary sector, which many founders don't want to do. When a client or potential client comes in and says, I want to form a CIC, I want to form a charity, we say, let's have a conversation. Very much one of the important questions in that conversation is, what are your sort of needs to earn a living from this? What is your aspiration for being remunerated from this? And what is your willingness to relinquish control if you haven't already got a board of trustees? And this is sometimes the issue that persuades people that forming a charity, despite the benefits for funding and tax relief, that forming a charity wouldn't in fact be right for them. And I mean, we've had a couple of instances recently where people have decided, just because of the control issue, that the right way to run their enterprise is a social enterprise rather than as a charity. So the tricky thing, as I say, is if you're the founder and you want to be paid and you want to be on the board and run the thing, that is a very difficult combination. Not impossible, but difficult in a charity.
What if you were to say set it up as either a CIC or a CIO based on an assumption about your need to to draw an income from the entity, and actually you changed your mind after some time? Can you convert one into the other if you so decided?
Yeah. You can start off as a community interest company. That's an easier
Right.
formation, which you can then convert into charity. And there are provisions in law to do a fairly automatic conversion if your constitution's right. You can also convert a charity into a CIC. You can't, however, convert an unincorporated charity into a CIC. If a charity is a company, in theory, it can be converted into a CIC, but it's complex because
Right.
the corporate property of that charity will remain charitable, will remain with charitable purposes. So that can't become the corporate property of the new CIC. If that is a route you are thinking of, certainly come and have a chat with us, is what I'd suggest.
Yeah, very much so. Thank you. Um, I suppose I get the impression that a CIC is an easier setup process than a CIO. How long does it actually take to set them up?
Well, a community interest company is much quicker to form than a charity. There's an online application to form the company sent into Companies House, which they will review, but also the CIC regulator will separately review, which takes a little bit of time, but it's a matter of days. It's normally around 10 days, so it's relatively quick. So if you need to get an entity formed quickly, even if you think you want it to be a charity, sometimes it can be quicker just to form it as either a straight company or a CIC and then convert later. Charity registration, however, takes, well, I've written the website, the Charity Commission website might say it takes at least 2 to 3 months. But in practice, it often takes much longer while you're dealing with queries and issues. And there's a lot more work. Most of it is in the work taken to draft your constitution, your constitutional aims, but more so your application form before you send in an application to charity.
Right, yeah. And I think that ties in with the governance requirements because I'm aware, and I'm sure you'll elaborate on the difference in the governance requirements between the two types of entities.
Yeah, I mean, this is about running the thing, isn't it? There is it is much more straightforward to run a community interest company than a charity. While CICs are regulated, as I said, by the CIC regulator. This is really comparatively pretty light touch, with the main requirement being that you have to send an annual community interest report to the regulator, which can be a matter of a couple of sides. Charities, by contrast, are much more strictly regulated by the Charity Commission in England and Wales, or the Office of the Scottish Charity Regulator in Scotland, and the reporting requirements for charities, for financial reporting and annual returns and other areas are certainly more stringent for charities and CICs, which is not to say that they're certainly doable. Most of our clients, as you know, are charities, and we make it as straightforward as possible.
Yes, absolutely. It's not an insurmountable mountain to pass. It's just a greater focus on those areas. We also talked about social aims, because I'm sure that when you come to talking about, charitable purpose, there are certain things that are sensible to focus on. But what about social aims? Are there restrictions around the kind of social aims that these entities can pursue?
Well, it's for a CIC. It's pretty broad. Uh, they must be carried out for community interest. There is a community interest test that applies to CICs, but that is much wider. There is an equivalent public benefit test in charities. Charities must be for a charitable purpose, and they must be carried out for public benefit. And the community interest test applying to CICs is much wider than the public benefit test for charities, which means that many aims that wouldn't qualify for charitable status probably can legitimately be pursued by a CIC.
That's great. But one of the things we haven't yet talked about is the asset lock in CICs. Is that something you could explain how it works, please?
Yeah, that's a good question, Emma, because it's something to sort out when you form a CIC. CICs, one difference between CICs and a conventional trading company is that in a conventional trading company is set up to produce turnover, to produce profit, to pay out dividends, distributions to the owners. The fundamental difference between that company and a CIC is that there is a restriction on paying out profits and assets at the owners. Typically, at a wind up of a CIC, assets can only be distributed to what's termed an asset lock body, which might be named in the constitution, or it might say charity or similar with similar aims. You set that up, but while running, and that's a protection to donors and supporters. Also, while running the company, it's sometimes possible to pay out distributions, dividends to the owners, if the CIC is set up limited by shares, but that will be restricted to a maximum of 35% of the profits of the surpluses, and you can set it to be less or to be nil, and that would be quite normal also to set it at nil. But but with that 35% distribution, it is possible to give some financial motivation to investors.
Giles, thank you. That was a really succinct explanation of the differences between CICs and CIOs, and really, really helpful.
If people listen to this and they have some questions, just get in contact and we'd be really pleased to have a chat. Or queries to us or to Larking Gowen, you can make queries via the contact details in the show notes.
Lovely. Thanks, Giles.
Thank you for joining us for Larking Gowen Insights, Accountancy and Business Advice for All. Don't forget, you can find more information about today's topic and more about how our team of experts can help you in your business by visiting our website, larking-gowen.co.uk. Join us again next time for another fascinating insight into the world of accounting and finance.